To me, one of the most important things to do when you're looking to invest is to simplify the process and make sure the process is quality. What I do is I examine 9,000 individual equities. Okay, this isn't publicly available. You can probably get this data from other sources or recreate it yourself. What you'll see over there is, well, actually it's closer to probably 10,000 stocks. And the reason I'm looking at 10,000 is because whether in my SIP, i.e. my pension 401k, call it what you will depending which country you're from, or in my ISA, the companies I invest in are basically looking after my retirement and my son's inheritance. So they better be bloody good at what they do. So I want to have 9,000 or 10,000 CVs. So what am I looking for in the CVs of companies? Well, based on research which is widely available from all the way from Nobel Prize winners to Goldman Sachs to whoever, we know there are certain factors which have an important impact upon share prices. We know, for instance, valuation based on profitability of a company and its stock price does have some impact, but it's not the only thing. We know that sometimes, of course, overvalued companies can do well and equally undervalued companies keep falling. So we know it's got some significance, but it's not the only factor. Similarly, with sales growth and dividend yields, there's research to suggest there is some correlation to share price movements, but it is not guaranteed. So we want to look at all of these, and what I've done here is I've scored based on valuation, growth, income. I'm not going to go into the details of, because it would take too long, of how we've scored that, but if you look at the URLs alongside, so if you look at campaignforamillion.com, I teach that in more detail. We look at cash flow. Okay, and I should say it's all free education because I want more people to be able to learn how to invest. We look at cash flow measured through cash return on capital invested. We look at most recent price movements because there is, again, evidence to suggest that trends tend to continue, of course, until they don't, but there is some evidence of causation, but it's not the only factor. So all of these factors have to be examined, and we greenlight those factors which meet our minimum criteria. And then what we want to do, once we've done that, is we might tactically finesse based on other criteria what these companies do and whether we want to have them. However, that really does sort things out. We can then filter according to what we like the look of and don't. Okay, that's how we do it. As a general rule, yes, we may well look at what's in other indices. We may well look at exchange trade funds. I don't tend to hold those, but for other people, we might look at those. And also look at what's in the portfolios of the billionaires and why have they got what they've got, what are they holding, and for what reason, for what duration, and how many stocks do they have based on the valuation of their portfolios. And it shocks people that billionaires tend to have such few stocks. You can have a whole debate about that. We'll also look at what some of the top analysts tend to hold as well, just out of interest. On the whole, I want to be owning stocks for, 100% of stocks in my portfolio, despite the fact that you might think I'm closer to retirement. This is an image from Goldman Sachs Asset Management. I'll do more of that in the future. Have a look also at campaignforamillion.com, all free information to take you into more depth on this.